Everybody, welcome back to the TraderMerlin show. Thursday and Friday, we're some time away from the show. Today, we are back in the saddle. We will be doing a show tomorrow. I will not be wearing the costume that I wore this weekend to the Halloween party. Complications there, ladies. Much props to you and all the preparation you do with your makeup and hair. Not for me. No more. All right, let's talk about our markets today. As you guys saw, I actually had a graphic today that I wanted to bring up, which was maybe symbolic of our marketplaces, which is the bull back? I received 2 questions asking me if I thought that this was the bottom of the market and maybe we're going to have a bounce from here. And I thought, you know what? Let's dive into that. So let's first start off by, I'm going to do a little bit different today and go through our top 8. We're going to start from the bottom, work our way to the top, even though the indexes are not at the top of the list. They certainly performed rather well today. We start things off at the bottom here with crude oil. Now, I'll talk to you about a couple trade potentials that I was looking at. I was actually looking at picking up some XLE, but then you look at this chart here of crude oil, and we've talked about this a bit. I'm actually still of the opinion that we're going to get $100 oil by the end of the year. And unfortunately, well, not unfortunately, it's great for anybody who's got a gas guzzling car like my truck. We're seeing fuel costs start to drop here. And notably, where we are right now with crude oil, which is just pretty much bouncing off that 82 level, we've been there 1, 2, 3, 4 times in a row over the past month. And what's noteworthy not is that we're at that 82 level, but that we're making lower highs along the way. You can see we peaked out at over $84, and then we're coming back down, and then we rallied back up and got to 94 to 90, and now this last little rally we had just on Friday, not holding up, doesn't look good at all. So it feels like it's getting weaker and actually looks like it wants to break to the downside here. So this deterred me from taking a trade today, which I'll look at XLE in just a minute. But that's your crude oil down 3.47% today, erasing everything that we saw it gain on our Friday session. All right, part of the reason we got this nice little catalyst, well, there's 2 factors out there. Number one is you had the dollar index, which had a shooting star on Thursday, indecision on Friday, and then today we had our follow through to the downside. All in all, I'm still okay with the dollar index, right? It's still holding demand. It's not making higher highs, which I don't like. I'd rather see this move to the upside and make some new higher highs, but hasn't done it quite yet. So this drop in the dollar certainly added a little bit of fuel to our markets today. Now, getting to the commodity side of things, here's your gold. 2006 is where we closed at for gold. What I like about this is we did break above that high again for the second consecutive session that goes back to July 31st. That high price was $2,010.90. On Friday's session, we actually hit an intraday high of $2,019. And then today, we opened up higher and then slowly drifted down. Unfortunately, we closed at 2006. So we did not manage to get a nice follow through on this one and did not close above the high from July 31st. What I really would like to have seen for a further continuation here of prices in gold would be a close above that high from July. If we get that, then I'll be a little bit more optimistic. It really feels like it wants to have a pullback here. But you notice every day, even though it's not making new highs, really, it's making much higher lows and long bottoming tails, which tells me that the bulls are there. They're buying it on the pullbacks, and they're pushing gold up, which had a gain of 0.39% today. Nothing overly dramatic. Next, on to our indexes. I'll do the 3 major ones. I don't usually look at the Dow, but I am going to look at the Dow today just because it is the best performer of the bunch. We'll start things off with the small caps. Russell 2000 is up 0.44% today. That chart still looks really bad. And this is, I know we've talked about this till I know some of you probably just stop, Merlin, enough already with this head and shoulders pattern, but it's not often that you see them come to an exact perfect completion. So not only do we have the Russell completing this head and shoulders pattern, which my target was 1650. Here we are at 1652. We hit a low on Friday's session of 1638. So that is a completed head and shoulders pattern in accordance with the measuring object, which is awesome, right? I made for some great trades for myself, and I'm sure some of you also had some great trades based off that one. The question now is what happens here? I was really debating going long on the Russell on Friday's session. Why? Because you're all the way at the very end of this yellow range that we've had for months. I mean, this goes all the way back into June of this year. Of last year, excuse me. So we're over 1 year. We have not been able to get below that. And as Pepe says, huge yellow rectangle. Yes, it is massive, but right now you've got to look at this and go, we are at extremes, right? We are right here at these lows, and we've hit it multiple times. Is it worth it to take a stab at the Russell from a bounce play perspective, from a long perspective? And partially, I do think so. I'll explain my thinking for the week here. I have kind of a master plan laid out. And as you guys know, the markets will do whatever the hell it wants to do. But it's important for us to approach each day and maybe even each week with kind of a mindset as to, well, here's what I'm expecting to happen. And I'll walk through after this kind of what my playbook is saying and how I'm viewing the events that are going to unfold this week. As you know, we've got the FOMC meeting, and maybe even more important than the FOMC meeting on Wednesday is going to be Apple's earnings on Thursday after market close. That one could vault this market higher or just absolutely crush it because of the weighting of Apple in the major indexes. So we'll get to that a little bit deeper here. So maybe I should do a poll before Powell and before Apple. Yeah, I know. Exactly, Chris. And that's exactly where I'm going with this. It's like I want to. If I didn't have Powell this week and if I didn't have Apple this week, I probably would build a pretty big position in Russell right now. I'd buy maybe 50 call options, expiring in January or maybe February to see where the best premium is. I'd go out of the money, and do I get a bounce back up to? Probably not going to bounce up to the 1800 mark right up here. Maybe we come back up to this last little area, but 1690. Well, if I can pull 40 points out with a 50 lot or 40 lot on the Russell, then that'll be a great trade from a small little bounce. I do think you're going to get a bounce, but I'm with Chris. Before Powell and before Apple, yeah, it's just not worth the risk at this point because all hell could break loose on either one of those announcements. I don't think Powell is the real damaged one. I think Powell is pretty much priced in. The one I think is really going to be the wild card is going to be Apple this week, and I'll give you my opinion on that as we progress. So I love the chart of the Russell. I really do. I think you guys know I've been bullish on Russell for a long time. I've been telling you that over and over. Been documenting the trades short. I have no short Russell position right now. And I am thinking of going long, but the risk just outweighs the reward in my opinion, so I'm not going to be taking that trade before Powell or before Apple. NASDAQ. My story changes here a little bit. Let's do a micro just for fun, Pepe. Nah. I mean, you could do it just for fun, but so NASDAQ is a little bit different. On Friday, I did open a position long on the NASDAQ 100. I'm in only 20 call options expiring in January. They're out of the money. I'm just playing it for a bounce to the upside. I was expecting there to be a bounce, and you may be asking, well, Merlin, why would you expect there to be a bounce? When you look at the pattern that formed right into the close on yesterday, we did break down below that yellow area of demand. So right there, you have demand violated. Let me ask you guys. I don't have time to type in the poll or any of that stuff here, but if you're looking at this chart right here, okay, and markets should respect that demand zone that's in that yellow box, and all of a sudden we rip through that thing like a hot knife through butter, what are your expectations for the next day, right? In my opinion, well, you guys type in the chat, what would be your expectation as the next day on this chart if we just knife through an area of demand and the day before that was a massive down candle as well? What would you expect to happen, right? What should the market do? Just based off probability, what would you think is going to happen here? So I've given enough delay for the, or enough talking for the delay to catch up here. But in this chart, given that, my mind would be thinking the real reaction to this price chart should be down. We should see it speed up. We should see a bigger red candle the next day because all of a sudden you're hitting stops, you're taking people out. It's going to freak people out here. So I'm basically waiting and saying, let me see what the buyers and sellers do on that next candle. In my mind, I was like most of you here saying, Lisa says continuation, down, more down. GS3 says dead cat bounce. Okay, we could have that. I was anticipating more downside movement, right? I was really thinking, boy, we're going to have a nice big red candle this next day. Give me some climactic selling, and then I'll be a big buyer. But all of a sudden, we got this candle, which in my mind right away makes me feel like because we didn't break the low, right? If this was really that bad and we were triggering stops and taking people out on Thursday's session, and then all of a sudden the next day we don't even make a new low, it feels like a fake out. Right? It feels like a fake breakout to the downside here. So right into the close, I went long on 20 contracts or 20 call options on the NASDAQ 100. and I'm expecting there to be a little bit more of a follow-through. Just so we're clear, those will most likely be closed tomorrow. I was really debating closing them today, but I think you'll get a little more follow-through. It's either going to be closed tomorrow, or without question, I will close it on Wednesday before the FOMC meeting. I will not be carrying those 20, it's only 2,000 shares of the triple Qs. Still not worth doing it to me. So I am taking a bit of a risk on that bounce trade. So far, it's working out okay. We'll see, when you close that, how it goes. Exactly, the bear trap, Pepe. It felt like a bear trap just because it didn't continue on Friday. So I am long the NASDAQ right now with 20 contracts, 20 options, call options on that one. So, here I am saying I'm not going to long the Russell, but I'm jumping on that NASDAQ. I know. You're contradicting yourself, Merlin. Well, I'm being transparent is what I'm doing. Because Apple, I think, makes up, 7% or... I'm not sure what you mean by that. Let's see what else we got. The gap against the trend is what? Pro gap? Yes. Right? So you have a small, little, tiny pro gap there. So I do think this will continue till tomorrow, and I'll be dumping this and getting out of that trade, which hopefully will make for a great, good continuation. Yep, exactly, Chris. I would expect it to continue, and it didn't, right? So again, I'm just in essence, what I did here on that trade I made on Friday is I'm just looking at behavioral analysis, right? I'm looking at what do the buyers and sellers do here. I would have expected it to all of a sudden pick up more momentum. That snowball just kind of keeps rolling, and all of a sudden panic kicks in, which I love that as well. That's fine. Let panic happen. But it didn't happen. Matter of fact, it seemed rather calm. You throw on volume here. Volume was actually much lower that next day. So there was no fear there. There was no triggering of more stops. So that made me feel like we're going to get a bounce. And so far today, I was rewarded. We'll see how it happens by the time I close this trade out. These things can change in a heartbeat, as you all know. So that's your NASDAQ. Again, I'm long that. S&P 500 was 1.16% move to the upside today. Notice it continued down. It did what I thought, what the NASDAQ should have done. Well, slightly different there. Now, the good thing for the S&P, if you notice, you are coming into some areas of demand, although it starts to get rather choppy. This whole area from April through June, I don't know. I don't really like it. It's just kind of nothing definitive or clear-cut, strong demand zones on the S&P. Your 10-year, which is drifting down right now. Let me go to there. There's your 10-year. It was up a little bit today, giving back just a hair of that one, but really consolidating, not making new lows, which is a good sign for anybody who's bullish on yield. I am in the camp that it is going to move more to the upside here. Let's see. Last on the list, Bitcoin, old BTC up to 34,765 today, 810-point move to the north. Again, strong big move on the expectations of a spot Bitcoin ETF happening in the next few weeks, which I am in that camp. I think we'll have it by the end of November. But really not a lot going on chart-wise. It looks like it's just consolidating. Some might call this a bullish flag, which is basically a long pole here. I'll draw it for people who don't know what a flag is. There is your pole of the flag, and then you can do it a couple different ways. I'm going to do it with a box just because it fits more appropriately in the box right now. And take my snap off, and there is your flag at this point. Right? So in theory, what happens here is this will move to the upside, and when it does move to the upside, you'll use the distance of the pole here as your measuring object to give yourself a target. Now, for those of you who would like to know what that might look like, if I do take this and map it out as far as where could this run to, you're looking at Bitcoin roughly 42,000 would be the target on a breakout here based off this. And again, if you go back to the articles I wrote for Bar Chart, my target was 45,000 on an approval of a spot Bitcoin ETF. So this kind of falls right in line with that. So there we go. Pepe says, is the legend John O'Donnell coming on this week to show? Yes, John O'Donnell will be on the show on Wednesday. We're going to talk about bond vigilantes and other topics. So if you really have something that you want John and I to discuss, you can always email me. The email's on your screen here. For those of you listening to the podcast, you can email me at TraderMerlin@gmail.com, or you can go to any YouTube video that I have on the Trader Merlin channel on YouTube. Put your comments down below. I usually take those first and incorporate them into the slide deck so we can get those questions. I have quite a few ready. Mark says, "Yi wrong? Maybe. I could always be wrong, and I have no problem with being wrong. Being wrong is absolutely, I'm going to leave this on here, by the way, just so you guys can see this Bitcoin target. We'll leave that on there just in case. As my viewers know, I have no problem being wrong. It's fine to be wrong. We're all wrong on a regular basis. Just own it, admit it, learn from it, and be humble about it. So, yep, I could be wrong. My trade could be totally wrong on this one. Now, let's go to the last one here, which is the Dow. Normally, I don't look at the Dow. I don't like the Dow. It's only 30 components. To me, it's not a good representation of the market, but it was your big mover today. And, of course, headlines talking about the Dow up 500 points. Cool. Great. The picture still looks bad. It kind of looks like what I'm expecting the NASDAQ to do. It's having a little bit of a bounce here. I'm probably expected to come up to, 33,300? And then from there, expected to drop back down. But you're still seeing... Is that what about me admitting that I'm wrong? maybe I'm just getting ready for marriage, Sly. I need to admit when I'm wrong. Oh, never mind. I'm surprised nobody here has commented on the shiner on my eye. I'm waiting for someone to go, what is with your eye, Merlin? Yeah, I see this little shiner. Okay, totally digressing here, but why not? You guys, you know me too well. So for my Halloween costume, I was really struggling with what to be this year. And as you know, I make really elaborate, crazy, wild costumes. And I just had, A, I didn't have time. B, I was just kind of, I don't know, I felt uninspired from costume making this year. So walking around and my girlfriend says, why don't you be a geisha? I was like, a geisha? So we ended up doing a geisha, and I had we got this white paint to make my face as white as possible. Fortunately, this paint never dried, and it just kept staying wet. I couldn't do anything with it, couldn't paint any makeup on it. So she goes, get this stuff off your face as quickly as possible, because there's we're gonna have a party here in a little bit. So I'm sitting there and I'm scrubbing my face so aggressively to get this. It would not come off. I mean, it was ridiculous. This stuff was like glue on my face, and I scrubbed so hard, I actually created lesions all around my eye and on my forehead from trying to scrub white paint off. So ladies who wear makeup, I appreciate that. Really, thank you for all you do, because there's no way I'm going to wear that costume again. Wearing face paint and eyeliner, it's just not my thing. But much props to the ladies out there that do it every day, because apparently society says that men think that's much more attractive. I want to see the photo. Thomasina, I'm polarizing the audience. Sly Dogs right now going, you dress in drag. I didn't want to know. And then I've got one wants to see it, one to see. This is society right here. One's like, no way. The other one's going, show me. Maybe. I'll probably post it on my Twitter. I got no problem. It's funny. I bet you if I post a picture of me dressed as a geisha on my Twitter feed, I'm going to get a dozen people saying that it's racist and how inappropriate it is. Get over it. It's not that big of a deal. Number two, they'll probably be offended that I dressed as a geisha and unfriend me. So be it, people. Life's too short to worry about that stuff. Have fun. Let's see, costume picture now. Maybe I'll show that picture, but yeah, it's just really funny how this shiner under my eye from a costume. It was terrible. Anyway, I'll find something to wear, because I always wear a costume on Halloween, but I will not be a geisha tomorrow. Exactly, Alan. It's fine because it's Halloween. Well, you know what? You guys are like my extended family here, so there you go. Wait, I'm watching the viewership drop as we speak. 59, 50. Next you see Bonnie and Clyde or bank robbers. All right. Too simple. I mean, normally I really like to go ornate and do something just crazy, but I didn't get a chance to. Anyway, so that is the gist of what we're looking at from our overall markets. Now, I want to bring up one other thing here, which is that yield curve. Guys, notice how close we are to closing that gap. This is, obviously great, because a normal market, we have a normal yield curve. Unfortunately, it's been inverted for a long time, going back into June of last year. I mean, that's the longest period it's been inverted. So, yeah, right. At least like the show before you leave. I know I might have freaked some people out. I didn't know it was a zit. Be a big zit, Big Ab. It's a pretty big one. No. I'm not a fighter, Lisa. I'm usually the guy who's trying to break these things up. I think life's too short to be fighting over stupid crap like a football game or something. But all right. So yeah, we have this. Holy cow, Kevin! Thank you very much. It does. It helped me with some bourbon. You will pay. You've just paid 3 months of my my feed so I can upload the podcast to iTunes and Spotify and all that. So the podcasters are thanking you right there, Kevin. Thank you very much. I appreciate that. Wow. I'm trying to keep on keeping. That was very nice of you. Gee Louise. So now I'm blushing. It's not the makeup, guys. I'm blushing. All right. So this is going to, in all actuality, everybody, this is going to continue to rise. Right? You're going to see this get back to normal. It's what a normal yield curve looks like. And typically we're well above this. And imagine if we got some sort of acceleration like we did back here in 2020 to the upside. That could be extremely problematic for our market. So I still am holding on to my beginning of the year thought that Q4 is going to be pretty ugly. I think that we're going to see more selling going on near the end of this year. I think we're going to see it just keep on drifting lower. I don't think it's going to be, absolute falling off a cliff, but I think you're going to see it grinding lower. Now, let's go back to the two elements that are happening this week. As I mentioned, I opened a new position in the NASDAQ 100, which will be closed out tomorrow. I also opened a position in Fortinet, which has earnings on Wednesday. I'll be closing that one tomorrow. I'm doing a very short-term trade on that one. I got deep out of the money, put options on that one, and I'm debating actually holding it. Let me see if I can bring that one up. This was also on Friday. You look at where we're at right now. The thought is that this gap could close. I sold the 49s, which are way down here, but I just don't know if I want to take that chance going into earnings. As you saw the last drop with earnings, Fortinet fell, I'll give you the percentage decline here. Fortinet fell 20% on earnings. Well, if we get anything similar to that, a 20% decline is going to put Fortinet right around $45. And yeah, I don't know if I like my 49 call option on that one. 49 put option on that one. So those are just two trades I'm in that will be closed out tomorrow, Wednesday at the absolute latest. One other thing I wanted to show you, which is somewhat historical, and I was joking about it a couple weeks ago when I talked about mimosas. And I know we have bottomless mimosas. I can go out to Newport Beach or Huntington Beach, and you go to these little bars on the weekend, and hey, we got bottomless mimosas. First up, I hate champagne. Ugh, I don't know, it gives me the worst headaches. But you got to make it with orange juice. I don't know if you guys have seen the orange juice chart. This is from Bar Chart's website. Look at this chart of orange juice. This is the highest it has ever been. And, really, if you look back here into the 60s, the 70s, the 80s, the 90s, it peaked at right around 210. We're almost double that. That is a remarkable chart here, everybody. Like, I'm kind of dumbfounded at how much this has gone up. And I haven't dug into it, but from what I'm hearing, and this is just conjecture at this point, so this is not legal talk, but I'm hearing that, a lot of these orange growers in Florida are just now selling their plantations to developers to build condos and high-rises, which makes sense because if you take some of the prime orange growing area of the U.S. and you have all these orchards and you just say, we're selling it, we're done with oranges. Remarkable because now all of a sudden you have fewer orange growers, you have less supply coming on the market, demand is staying the same, if not going up because of population's growth. You would think that the farmers who are still there are going to be loving this. Like all of a sudden their crops are going to be worth way more. So those that sold made a ton of money, but those farmers that are staying are probably doing pretty well. Pretty crazy. Orange juice is orange sugar with some pulp. Yeah. Crazy. It's really interesting. I mean, to me, this chart is just wow. Like that looks like a Bitcoin chart, doesn't it? That's the real I need on the equities. Yeah, don't we all? This is the chart I want to see for I want to see this in any position I'm long in. I mean, come on, we all do. And what's shocking is this isn't like it's taken a decade to get there. I mean, this bottom is 2020. So from 2020 to 2023, we've gone from about $85 on this orange juice future contract to $400. That is unbelievable. What do I think on gold? I just mentioned that one just a minute ago, Eric, but like if you look at the gold chart, I drew out a bullish flag on this one. Was it bullish flag? No, actually that was Bitcoin. I'm sorry. I drew out the bullish flag on Bitcoin. For gold, if I'm looking at the gold chart, I love the chart. It looks like it's gaining strength. It's making higher lows. These tails we've seen over the last 6 days have been great because it shows you there was weakness. I'll zoom in here real quick so you guys can see it. Note these tails. I know for newbies and for those of you who are might remember when you first started, you would look at this price chart and say, oh, cool, it's going up. I got price. But there's so much more being told right here. And really the most important part of this chart, after the fact it's on an uptrend since mid-October, or early October, excuse me, is right here. If you go back to October 20th all the way through today, notice that you have these long bottoming tails. That is so important. It's literally telling you that the buyers dominated. And people will say, well, the sellers pushed it down there. Who cares? The buyers are the ones that finished that argument and just came ripping back to the upside. So to me, this tells me that the buyers are extremely confident. As this thing is selling, they are buying it and pushing it right back up. So I'm very bullish on gold in the long term. Again, I'm in the camp of I don't think you're going to get a peaceful resolution in the Middle East or in Israel. I think it's just going to create a bigger tension problem, and I think there's going to be that flight to security, which is gold, silver, and for many, Bitcoin. So I'm bullish on it. What I really think you're waiting for, Eric, is you're waiting for the close above this July high. That to me is the next milestone you need to get past. But right now it looks really good. Mixon sold all the properties in Florida for $42 million. Wow. Seems like a drop in the bucket. Drop in the bucket. So yeah, I'm bullish on that. As you guys know, my largest position right now is still silver. I have a significant position in silver, which doesn't look anywhere near as good as gold. Gold's chart, I think, looks better. But it is, showing some strength. It's not making new lows. It has a similar pattern here with these long bottoming tails. So I'm feeling good with that. I just continually sell calls that are out of the money against my position. And fortunately for me, it rallies up, gets close to them, but closes below my call strike. And I get to keep it. And I sell calls the next month even higher, thus increasing my rate of return or lowering my dollar cost average at a minimum. So there's my thoughts on that. You mentioned monthly on gold. Let's take a peek at that monthly time frame. Look at the big. Let's go weekly first just to see what that picture looks like. Okay, nothing really important there. You go to the monthly. Yeah, wow, monster engulfing. And it's a perfect one too. It actually incorporates all the tails, which is the key for a engulfing pattern. Well, you've got this great engulfing. Excuse me. But you haven't been able to really make a significant high. I mean, we're hitting at 2,000, right? We're at it right now, 2005. And then, your next milestone's at 2,100. I forgot why we drew this line on here. I don't remember why that blue line is there, but that's really your next area of contention is that 2,100 mark, which is right at the peak that we saw back in May of this year. Do you trade futures or options? Seems like not enough volume. It depends on the market. Depends on what I'm trading. I've been liking options more and more. I don't know why. Just when I look back at my rates of return, I seem to be doing better with options. But it's also because I have more flexibility, right? I can go long directionally. I can go short. I can be a debit seller, a credit seller. So it just has more flexibility for what I like to do. But I'll still go in futures every now and again if I've got a real strong conviction. But I really haven't been trading futures that much. I'll go with the ETFs. Thank you, Lisa. That was building up there. I was trying to fight it. No one likes to see or sneeze on camera. All right, let me go to a couple questions. There's a couple things that are... Well, this came in from Manny. Let me just bring this up real quick. Manny says, could you please take a look at Tesla on a 5-minute chart? The last 2 days, let me know what you make of the numerous big candle wicks. So let's take a peek at Tesla here. He says, I haven't seen this in recent weeks. Is that market makers grabbing stops? So here is Tesla. 1 second as I bring it to a 5-minute chart for you guys. And we will strengthen that out. So here's your 5-minute on it. And I'm struggling to find those long wicks that you're talking about, Manny. My guess is that whatever brokerage firm you're using is having data issues. So typically, this is more of a mechanics thing about how the markets operate. The rules changed sometime in the 2000s. It was like 2005, 2006. They changed the rules, which make it's against the law, financial market law, to trade outside the NBBO. That's the National Best Bid and Offer. That's your bid and your ask price. So what used to happen, let me see if I can draw this real quick. We'll go back into the classroom here. It'll take me just a second to get this all set up for you guys. We'll go new slide, and I will make this a white picture. Okay. So here we go. Let me grab my pen and just kind of show you what this looks like today. When you have... So the NBBO, NBBO, you have a bid and you have an ask. And so typically with the bid and the ask, see you later, Pepe. Have a good one. Oh, you think it's with Thinkorswim? Oh, sorry. I'm over here drawing. Sorry, everybody. Just staring at my head. Typically with the bid and the ask, what you end up with is, let's say bid prices here. No, you didn't miss any birthday stories. I keep those private, buddy. I don't know, no telling there. So let's just say we go $20, right? $20, and this is gonna be 19 and 18, right? It just drops down. If you go over here, let's say it's 21, 22, 23. The only reason I'm writing it this way, guys, is it's just easy. You guys, you all know that there's very rarely will you find a $1 difference between these two, right? It's typically going to be a penny, maybe 2 pennies. And each of these levels between are typically 1 penny. So NBBO right now would say that no market maker, no E-Trade, Charles Schwab, if you want to sell at market right now, they're going to have to give you $20. And if you wanted to buy it right now, you're going to be paying 21. That extra money goes to the market maker. What happens with, at least in 2000s, where let's say you went to E-Trade and you said, oh, market order to buy 1,000 shares. They'd fill you some here, some here. They'll fill you what price they were quoting. And this may be their quote at $23. So all of a sudden you're like, wait a minute, I saw 21 was the price, but you filled me at 23. This was a scam that was pulled on by these brokerage firms for a long time. And they don't do that anymore because the rule, I forget the name of the rule, something 26. But the rule now says that they cannot trade around the national best bid and offer. So what that means is you can't get those crazy wicks. So what you're getting is most likely bad data, Manny. You're getting some latent data. Typically what will happen is as transactions come through, their system may be bottlenecked or something might have slowed down or something just got stuck. And so let's say the day is going on and price is moving up and all of a sudden a late quote that maybe happened earlier in the day comes through and that one print comes through and creates this really long bottoming tail. That's typically what happens. And I do believe that market makers do it on purpose. What they'll do is they'll save a trade, right? So let's say an order comes through for 1,000 shares. They execute 900 of them, but they leave that 100 there. And they go, oh yeah, we made that transaction. We just didn't report it. It got stuck. So they report it later on to create those long wicks to maybe trigger somebody who's got automated stops in the system. Sneakiness that goes on in the industry, right? Oh, it's all fair and honest and truthful in that playing field. No, shenanigans. But my chart, at least TradingView, this should be coming straight from the NASDAQ, doesn't have any of that. So I'm not sure where that long wicks were. There we go. So I'm not, yep. I knew I was not showing my chart there, Lisa. My apologies for that one. Maybe it's the hangover from Saturday. So there you go. What else do I have here? Going through there. Long wicks today. So if you look at Tesla for today, I don't see a long wick, right? I see a long real body, small wicks. I mean, there was a lot of activity, but I really don't see on the 5-minute, I don't see any long wicks on this bad boy. It's not that a long wick is essentially meaning that is that it's a bad data. It could be something that's extremely volatile. For example, I'm willing to bet if we went over to here to some of these, gainers or losers, you'd see some pretty long wicks. Oh, not on this thing. Eesh, yuck. It looks like garbage. I actually do some fairly long wicks, but typically when there's a lot of panic, a lot of volume, you'll get big wicks back and forth. God, that's ugly. Anyway, Tesla's very ugly. And, if you go back to why, obviously Tesla their profit margins have been shrinking, right? And everybody's known that's coming because even though they're selling more vehicles, they are being forced to cut their prices because of competition. If you have a monopoly on the marketplace, and they didn't have a monopoly, I understand that. I'll get pushback. Oh, well, there was Priuses and all these. They were the absolute dominant force. Yes, there were some other EV companies, or at least models, but nothing competed with Tesla. It wasn't even close. Now, all of a sudden, there's more and more and more popping up. I made that point. I think we did a show back in 2020 on this, on why I think Tesla might have some challenges going forward just because of that competition, right? There's no way to be the only kid in town forever, especially if there's that much demand and incentive for governments and programs to go electric. You're going to have a lot more competition step in. One of the big talk tracks with this one has been the BYD company, which is one that's backed by Warren Buffett. I think, if I'm not mistaken, Warren Buffett initially bought a 10% stake in BYD. Now he has like 8.5%, which is a Chinese firm, and they built BYD in like one of the poorest areas of China, and now it's become this hub. They're cranking out vehicles. Yeah, you know why they're cranking out vehicles is because I'm pretty sure the people are getting paid like $1 a day to build cars. Whereas you got to Detroit, those people are like, I want $150 grand a year to build a car. it's hard to compete with that kind of labor imbalance, a cost of labor imbalance. But from the pictures I've seen, the vehicles look great. Their profit margins are 22% year over year. Pretty good. Pretty good. So the competition is heating up more and more. And again, a lot of that competition is going to be coming from China. And we'll see. I think that's taking a bite out of Tesla's dominance. But look at the daily chart of it. Tesla's looking pretty ugly. Pretty dang ugly. There's your symmetrical triangle, which we talk about, compression. It said when it breaks, it's going to break pretty aggressively, and it has. Gap down on that earnings and really has not looked back. Today was a pretty ugly day on Tesla, down 4.79%. It's already down another 0.5% in the after hours. Right now, for my eyes, I'm looking at 184. And I'm not quite sure if I want to buy. There's 184, and I could also see maybe going to 166. I just don't know if I want to be catching that falling knife right now for Tesla. I'm an Elon Musk fan. I like what he's doing, but right now, I think the bulls have been taking profit on this bad boy, and I think they're going to continue to do so. So I'm not going to take that chance just yet. I might, but I'll let you guys know when it. I did last week, playing just a couple-day premium sale, which was awesome. Tesla, I saw something that Musk wants to give Starlink access to Gaza. Could that be something hurt him? It might. I don't think that is the major piece. I don't think you're going to get that kind of backlash, but I think it's just increased competition. It's the realization from their earnings that things are slowing down, and the impact of competition, not just domestically but foreign, is starting to take a bite of their profit margins and their competitive advantage. Does that make Tesla a poor performer? I think Tesla's still a great company. I still think that they've got a ton of potential, especially if they get the Cybertruck rolled out. But right now, I think people are like, all right, I've enjoyed that run. Let me back off. And I think so, MJ. I think the Cybertruck will stop the bleed, but they're talking, maybe late this year, maybe December. They need water in Gaza. They need peace in Gaza. You gotta just like people to stop hating each other like that. I think that's the ultimate thing. It's bizarre. I have friends from Israel, and they're usually very quiet and friendly on social media, and all of a sudden, I had to mute them. They were just so over the top, going nuts, and I get it. It's a horrible situation, but there needs to be some peaceful solution to all this, as opposed to continually fighting and starving people of no water, no food, no electricity. It's ridiculous. Okay, let me go to there's a couple of questions here, and if you have some more, type them on in. If you look at Dorothy, you said this question. It says, I'm new to crypto. What would you recommend buying to start? I don't recommend anything. I recommend you understand crypto before you even think about getting into it, because it's very dangerous. It's extremely volatile. I am a fan of it, and I have a good amount of capital in the crypto world, but I also do a lot of research on these projects. I make sure I dig into all of them and know exactly what I'm buying, why, I have all the justifications. So I think you should just research and educate. A good starting point is just start with Bitcoin. I'd say buy very little. It's a tiny little piece. And then once you have some and own it, just start doing some researching and just see, what you like and learn about it. Do not buy anything off any influencer's opinion, like mine, right? If I tell you that I like Chainlink, which I'm a fan of Chainlink, that doesn't mean buy Chainlink. You should do your own research, right? I may have I don't. I own Chainlink, so obviously the higher it goes, the better. But I'm not trying to persuade anybody to buy it. You have to do what's right for your risk tolerance. And just because crypto is exciting and moves a lot doesn't mean you should get into it. Not only does it move up, it moves down pretty significantly. So I'm not in the position to give recommendations out there. If I were to point someone at a starting point, I'd say start with just a very little bit of Bitcoin, and then once you have it, start researching it. Know why you bought it. Know what it does. Know how it functions. Know the emission curve. Know proof of work, right? Know how this mechanism works, and then you start to see other market segments which may be appealing, and with new technologies, disruptive technologies, or just products that may be beneficial for markets and economy and just the world going forward. That's the real beauty of crypto, in my opinion. It's not just one project. There's hundreds, and they all utilize a different technology. So research and understand it before you jump in. Should I be using Coinbase to buy crypto because they have the lowest fees and most well-trusted? Great question, Patrick. So I had this question today, actually, from a friend of mine. Coinbase doesn't have the lowest fees. From my last research, Binance had the lowest fees, but Binance has no ACH. So Binance is dead to me. Kraken and Gemini have very low fees. I like the Kraken platform better. I've been a fan of theirs for quite some time. Yeah, I liked Kraken. Coinbase, Kraken, Gemini are all fine. Their fees are all relatively low. Just make sure that you don't use their basic platform. Use their advanced platforms. It's the same login, same everything, but there's usually a button to go to their advanced platform, and then you get significantly lower commissions, and you also get to see the order book and know exactly where your order is going, as opposed to their basic execution, which is hit the buy button and you bought something from somebody somewhere. There's too much room for manipulation on that one. Make sure you direct it yourself. But Chainlink is up over 35% last month. Yeah, it's doing pretty darn good. I'm loving it. I don't know why my screen just pixelated like that. That was weird. Yeah, Chainlink, and also another one that I missed one of my latest purchases was Solana. When I was teaching my CIL program, my crypto program, Solana has been one that was just absolutely crushed. Been in just bad shape. And now all of a sudden people are starting to realize that, hey, there is some potential. Solana up another 6%. Man, here's Solana over the past couple weeks. Let's go back to its low here, which is from September 10th to right around the peak. You're looking at almost 100%, over 100% gain. I'm very happy with that. I mean, my last purchase was at $13.90. So yeah, there's definitely some good stuff out there, and hopefully, this Bitcoin spot ETF will lift this whole segment up, and we'll see it kind of keep going and going and going and going. So that was Marcus or Dorothy's question. Let me see. I think I answered this one. Let me real quickly make sure I get to everybody. Yeah, I think I answered this one, and you guys let me know if I did. I know I've had it. It's been in the slides, but let me just maybe answer this one. Marcus says, I'm new to your show and trying to learn as much as possible. How long did it take for you to get it? My head is spinning. Well, look, this show is kind of got a nature of its own. Initially, when I did this, it was meant to be kind of a basic market overview and looking at it. But given the audience here and the people that are in this room, I've kind of not modified it, but I've adapted to their needs. So in many ways, this show could be a bit more advanced than, for someone who's just starting out, this might be a little bit too over your head, especially with some of the terminology I use. One thing that may help you and anybody here who is new is there's some common nomenclature and things that I talk about, and you hear me say things over and over again. Well, I would just make notes to yourself, write those down, and real quickly research those. When I talk about the major market indexes, if you're looking at trading, you should know when I talk about the 10-year, or talking about the Dixie, the dollar index, or talking about NASDAQ, Russell, Dow, S&P, gold, silver, Bitcoin. Those things you should know because those are kind of, in their own way, a fulcrum from some other market segment. Meaning that if you know what one does, it could influence this segment, and then that could influence this segment. And then it all starts to tie together the more that you look at. So I would say that's probably the easiest way to get started. I mentioned a couple days ago or a couple weeks ago, I lose track of time, that I'm thinking about putting together just very basic, this is what a stock is type videos on my YouTube channel to help some people out. But I don't know. It's just a lot of extra work for me for really, I hate to say it sounds rude, but there's really no reward for me other than, I bring in more basic followers. But that might be something I do down the road. And ultimately, if you have questions, Marcus or Patrick, Big Eb, you guys all know, just send them on in underneath any of the YouTube videos that you watch, or you can email me at TraderMerlin@gmail.com, and I'm usually pretty good at answering those live on the air. So there you go, Marcus. Yeah, Polkadot not doing well at all. And I mentioned my disappointment with Polkadot, and one of the main things is Polkadot at one point was trying to be a chain that connected multiple projects. So you could have Ethereum talk to Litecoin, you could have Litecoin talk, all of these ones use different languages. So that's why I was really big on Polkadot, and I built a pretty decent sized position in Polkadot, but I'm not a fan. Right now, I'm not a fan of Polkadot anymore. How could you be? Look at this chart. It's crazy. This chart was fantastic back in 2021. Amazing. We hit $55. Now we're at $4. It's and one of the main reasons they're not doing anything anymore. I'm not seeing their community alive and vibrant. It was really busy and active, and they were doing so much. And I know, look now, their roadmap, it's like they just stalled. Like there's just no development going on anymore. And I don't know, it's not, unfortunately, you can do all the research you want, but it's ultimately that team that's there that needs to be the ones who continue to do development improvements. Same thing for EOS. I was loading the boat in EOS back in 2017, right? Way back here, right? In early 2017. mid 2017 when I really started getting into crypto. I was loading the boat on EOS, loaded, because this thing was doing 50,000 transactions per second when Bitcoin was doing 7. Like, holy cow, this is the one that's going to be Visa, and it had such great potential. Shot up to $23. Yeah, I'm regretting not getting out of that bad boy, and now it's just drifting lower, lower, and lower, and here we are at 62 cents. I mean, this is probably going to go to zero. Again, it's about community. It's about the developers building things that society wants and needs. Polkadot's not doing it. EOS isn't doing it. A lot of others are going to start to go by the wayside. On the flip side of that, you have all of a sudden developers are coming back into Solana, and they're building more things on Solana. So this is starting to turn back around. Not to say this is going to get back up to this, $300, $260 mark, but at least the uptrend is back in place and things are starting to look better. Other ones, I'm definitely a big fan of. Render. Render's been on an absolute tear lately. You look just the past couple of months, we'll go from where it started to where it ended. 46% in the last 15 days. Love it. But each one of these does something different. Except this pile of garbage, Shiba Inu, just a scam. Yeah, trust me, I'm not going to leave this one alone until it goes to zero. Until it disappears. Until people stop talking about this steaming pile of trash that is Shiba Inu. I will not talk about it. Or the Pepe coin. Just because Pepe is here in the audience, he has his own coin. No, this is not Pepe's coin, but this is one of the dumbest things on the planet. Pepe coin. This just shows you that there are really stupid people in the world. That this thing, which literally on their site says it's a joke, it doesn't do anything, it has no use at all. People are still buying this. You can't fix stupid. All right, let me go into your economic calendar and earnings for tomorrow. Oh, wow, I went on a long show today. Didn't think that I was going to, but here we are. Tuesday, this is what we got cooking for Tuesday. You have, for the United States, you have Employment Cost Index. The two that I'm really interested in will happen 30 minutes before the markets open. Oh, no. And why is my clock off all the time? So it says, I think this might be 7 a.m. I'm not sure. I don't know why my clock is wonky, because it's not 1:37. I don't know why. Time for my, where's my daylight savings time? Basket case. Let's go to, I think I go to here, right? Would that make it better? Hold on one second. Fixing my clock. Oh, great. Now it just changed. Totally the opposite. All right, I'll leave this at Pacific time. Never mind. And now it's correct. Okay. Finally. Got my time back to normal. So that will be, it still says 6 a.m. Okay. So it's going to be 30 minutes before the markets open. That's going to be the S&P Case-Shiller Composite 20 Home Price Index, which you guys saw me do a little bit of a video for OTA on Monday Morning Must-Knows. If you haven't looked at that one, check out on Trading Academy. I might actually retweet that one out on my Twitter page, which I should be doing anyway since I record the dang thing. But you have HPI data and Case-Shiller Composite 20, which the Case-Shiller is supposed to rise significantly, which is good. You want to see that rise. That means that home prices are back on the rebound, and that will help home buyers from potentially going into default. If we continue to see this go down below zero, then that increases the probability of a bad housing market situation going forward. So right now we're at 0.1, which is just above zero. Hopefully we'll get that to 1.8. Other information, you have CB consumer confidence numbers, and that's pretty much it for the big news announcement. You have a GDP number coming out for Canada. And then if you look at that earnings calendar, which I didn't have that one all set up for you, so let me bring up the earnings calendar here real quick. I should just have that one set up all the time, right? So here's your earnings for tomorrow. I can real quickly show you some of the names today, like Western Digital and McDonald's both had earnings beats and did rather well today. Tomorrow there's some much bigger names coming out. You do have AMD, BP, Pfizer, Caterpillar, Chesapeake Energy, natural gas. See how they do. Marathon Petroleum, Amgen. So some big names coming out tomorrow with regards to earnings. So be careful if any of those are in your portfolio. In all likelihood, tomorrow will be a lighter day. Because when you go into an FOMC announcement like we're going to get on Wednesday, people become a little bit more cautious, a little bit more defensive, and I think that's most likely what's going to happen. Patrick says, you think we're probably going to rally on the NASDAQ tomorrow? I think so, a little bit more. I do think you'll see just a little bit more upside here. And then, personally, you want my 2 cents on Apple? I think Apple is going to miss earnings, and I think they're going to lower their forecast. I think that they're going to, the documents will show that this new iPhone, the 15 titanium thing, have been appallingly bad. I think it's going to be dismal, and I think Apple is going to gap down and drag the markets down. So I certainly, sure as hell, don't want to be long Wednesday or Thursday. But I think Thursday night is going to be the big announcement. But we'll talk more about that later in the week. I'll have to dig into some of the numbers and see. I'm just not to be a pain. Could you take a look at the screenshot I sent you a few minutes ago just to get your take on it? Anyone else? No problem. Let's see. It says no preview available. Not going to download it. Great. You're sending me viruses and stuff? Oh, yeah. So here's the picture. Yeah, this is your 5-minute. These are wonky wicks. Like, you shouldn't have that. I'll do side by side. And that's definitely going to be a thinkorswim issue. And I don't know why that is. But I'm going to try to go back to the exact same point that you have. Yeah. So you guys see that big sell-off? I'm going to try to make these charts look identical. So hold on just a second here. I think I'm pretty close. I'm almost there. So there's his chart. You guys can see these long wicks right here. Lots of crazy wiki action going. My guess is those are just delayed quotes. And same thing back here. Right? Now look at my chart. I have a couple small wicks, but nothing that's that dramatic, particularly here during this market sell-off. Yeah, I don't have anything that's nearly as bad as what you're showing. So that's got to be on your platform. It has on the dollar index too. I wonder why that is. They've got to be getting their data from somewhere. So here's the way a couple things work. There's the NASDAQ data, which is the actual feed of everything aggregated together. So remember, you've got ARCA, you've got EdgeX, you've got all these ECNs, electronic communication networks, and each one of them is like its own little market. They report to the NASDAQ. So what you could be getting, and I'm not 100% sure on this, does it say in here, no, it says your data feeds come from the NASDAQ. They may be getting from one of those ECNs. And if they're getting from one of the ECNs, then you could have a lot of real crazy volatility because you're not getting the full picture, right? It's like you're getting a picture of the swimming pool. This picture over here that I have is the swimming pool with all the transactions coming straight from the NASDAQ. This may be just one ECN because they save on data feeds by just going with one ECN. Sometimes an ECN will do it for free. And that may be what you're getting. And essentially, you're looking at a small segment of the pool, but not the whole thing. So it's I feel like that's what you're getting here. Not 100% sure. I'd have to do some research on it, but yeah, that those are not very normal, and these aren't even that bad, honestly. Yes, they're long wicks, but it's all of a sudden you'll get some wicks sometimes that distorts your chart. They're so massive, all of a sudden your chart goes and tweaks because it just can't fit that long tail on your candle. It happens somewhat frequently. All right, so what's Apple's weight of the S&P? Of the S&P, I think 7 or 9. Let's see. Let me hear real quick. I'm not going to go past an hour show. So here is of the S&P. Yeah, so you're 7% for Microsoft, 7% for Apple. Apple's just slightly ahead of Microsoft. So yeah, 7. But that's not the one that really gets me. What gets me is this one. Oh no, that's not it. It's the component. There we go. This is the one I think is important. Apple is 11% of the NASDAQ, right? So if all of a sudden, while 7% is big, remember, it's 7% of the index of 503 companies in the S&P. So if Apple has appallingly bad earnings, a lot of techs can have sympathy with it, but the S&P will probably be more of a muted sell-off. NASDAQ, however, has 100 different companies in it, and this is 11%. So you can see the proportion of that index. It's way heavier in NASDAQ. So that's why I think NASDAQ's going to be the one that really gives tons and tons of action on your Friday morning session. After hours Thursday into Friday morning. All right, everybody, that's going to do it for me. I think I'm going to try to bring on a second guest here soon, maybe a third, because I know you guys want some more guests and you're getting tired of me just talking markets, which is fine. John O'Donnell will be on Wednesdays talking about bond vigilantes and really whatever else you guys would like to discuss. If there's somebody else you want me to bring on, let me know, or just tell them to contact me and I'll get them on the show. Within reason. There's some people I will never bring on the show. If I do, I'm just going to ask them a lot of personal questions and then they'll never answer it because they'll know that they'll incriminate themselves with bad information. Anyway, thank you guys so much. Have a fantastic remainder of your day. Happy Halloween tomorrow. I hope to see you guys in some costumes. So get some costumes on. Have fun tomorrow. It's the one day a year you can be anything that you want to be, and no one cares. Just don't hurt anybody's feelings. Have a good one, guys. I will see you tomorrow. Take care.